budgeters. Welcome to another episode of Sensible Chat. I'm Sensible Bobby. Thanks so much for joining me today. Last week, we talked about how to bring your spending in line with your income, how to find money to put toward your debt, and how to figure out how fast you can pay it off using the debt snowball method. This week, we're going to use all that information to create your spending plan so you can start moving toward debt freedom. This is step 4 in the 6 steps to slay your debt. The spending plan helps ensure that the money you found to put towards debt actually goes to paying off your debt. Think of the spending plan as a layout of your paycheck. It's a list of items that you want or need to spend money on and a dollar amount for each one. If you're living paycheck to paycheck, you need a spending plan for each check. We're going to go on the assumption that you're paid twice a month and that your pay dates are the 1st and the 15th. Now, I'm going to take you step by step through creating your spending plan. So if you're listening to the podcast, you may want to jump on the YouTube channel so you can see exactly what we're doing. This is the financial picture that we put together a few weeks ago. And as you recall, we have each individual bill or expense listed here, along with the amount and the due date for each. Clearly, there are some that won't have a due date, like your groceries or your gasoline. Now, we're going to put together both of your spending plans for the month so that we can split up each of these bills and expenses and put them on the right spending plan. We're going to start right at the top with the mortgage or rent, and you can see that that is $1,000. Now, the first inclination would be to say, well, it's due on the 1st, so we need to put it on the first spending plan for March 1st through March 15th. But that is not the way that I'm going to do it, because if you need to pay your rent on the 1st, you don't want to cut it that close. If something happens with your check, you could end up being late on the rent. And the goal here is to always have your money waiting for the bills instead of the other way around. So I chose to put the rent on the second spending plan, which is March 16th through the 31st. That way, you always have your rent set aside 2 weeks before it's due. Now, because the rent is such a big piece of your total check, our total check, by the way, is $1,400. If you remember, our total income for the month is $2,800. So if you split that up between 2 checks, you have $1,400 per check. So since we have rent listed here for $1,000, that's already a big chunk of the $1,400 we have for that paycheck. So as much as we can, we are going to put the other expenses on our first paycheck because that's where we have more room available. So if you go back to your financial picture, the next expense is the electricity, and that is due on the 4th. So we have a couple of days after the 1st. So we're going to go ahead and put that on our first spending plan. And you can see that I've done this already. Electricity due on the 4th, $150. So now we go back to our financial picture and we go to the next one that we are using as an expense. We're going to skip these because they don't relate to us. And the next one is groceries. Now, you can see that this is a total amount for the month, $400 for the month. But since we have 2 paychecks, let's go ahead and split that up, because if you put all the money aside for groceries on one paycheck, you usually end up going through it a lot faster. Not to mention the fact that, again, we need to split it up because you wouldn't have room for all $400 over on spending plan 2, along with other bills. You would have too many expenses for the total of your paycheck. So we split the groceries up, and we have $200 on spending plan number 1, and then we have $200 on spending plan number 2. You can notice that we have done the same thing for gasoline for the same reason. There's $100 there and $100 here for our total of $200 for gasoline for the month. So as we go down, we do the same thing for each bill or expense. We decide which spending plan it belongs on, and we keep doing this until we've got all of the expenses listed, and we can see our total expense is tallied up here. This worksheet is doing the math for us. And so our paycheck total is $1,400. This is where we're at with all the expenses that I've listed here. Now you're going to see a bunch of these that are saved for annual payment. If we go back to the financial picture, you will see those like the car insurance. That's $700 per year. Well, if we're making $1,400 per paycheck, then $700 is going to be a lot to come up with in one shot. So if we break it down into 12 payments of 5834, we'll have our entire amount. But that means that we need to set aside that amount on each spending plan. And so that's what we've done here is we've put those saved aside for our annual payments. So once we've been through each bill or expense on our sheet here and put it on the spending plan that it pertains to, then we can go back and see how much money we have left. All of these expenses that are listed for our first spending plan here for March 1st through March 15th total up to $1,363.75. But our total paycheck is $1,400. So that leaves us with $36.25. That's good because if you recall, we decided that we have $41.25 per month to put toward our debt payoff program. But this is only $36.25. So where's the other $5? It's over here on spending plan 2 because as you can see, all of these expenses add up to $1,395 and our paycheck is $1,400. So, how do we deal with the fact that we have $5 over here and $36.25 over here and it's all supposed to go toward our debt? Well, here's what we're going to do. First of all, on your first spending plan, March 1st through March 15th, you can see that that is where our personal loan is. Now, that is the one that we have chosen to go after first because if you recall, the debt snowball method says that you go after the lowest balance first. And so our personal loan is our lowest balance at $1,000. So the minimum payment due is $100. Since we have $36.25 left over, we are going to add that to our personal loan payment. And we're going to make that $136.25. Now you can see that that makes our total $1,400, which is exactly what our paycheck is going to be. So we're in line, and when we make our payment to the personal loan, we can make it $136.25. Then on the next spending plan, we've got this $5 hanging out here. So what we're going to do is we're going to add a line that says save for personal loan. So that $5 added for the personal loan brings our expenses for this spending plan to $1,400. Now, $5 doesn't seem like a lot, but believe me, it adds up over time. And if you don't add it into your debt payoff plan, then the timeline that you set up based on the $41.25 is no longer going to be valid. You'll be amazed at how much $5 adds up over time. So there you have it. Now you have your two spending plans for the month. Spending plan 1 is for the 1st through the 15th. Spending plan 2 is for the 16th through the 31st. And all of the information here came from your financial picture. Now that you have a spending plan, you're ready to start paying off debt. Follow the plan and you'll hit the goal on the timeline you set forth. It's simple math. But remember, these are templates and unexpected expenses come up. Things change. So always review your spending plan before your paycheck comes in and tweak it however necessary to make sure that you're still on track. When unexpected expenses do come up, do everything in your power to get the money from somewhere besides the money that you're putting toward your debt. Anytime you reduce the amount that's going toward your debt, it's going to mess up your timeline for becoming debt-free. Let's look at an example. Let's say you need to do your taxes during the month of March, and you're going to get the TurboTax software to do it, but it's going to cost you $60. You already have your spending plans made out for March 1st through March 15th and for March 16th through March 31st. And they add up to your total paycheck. So where are you going to get this money from? Well, obviously, you're going to need to change something on your spending plan. Spending plan 2 is probably going to be pretty difficult because you've got your rent and your credit card, your groceries and gasoline. There's not a lot of playroom here. So let's look at spending plan 1 because during this part of the month, we have a lot more room to wiggle. So the first thing we're going to do is we're going to say, okay, let's add it to spending plan 1. So I'm going to go ahead and put in TurboTax. And the amount that we're going to pay for that is $60. So you can see that now your total expenses are $1,460. Obviously, that is too high because your paycheck is only $1,400. This means that we need to subtract $60 from somewhere. So there's a couple of things that we can do, and whatever works best for your situation is clearly what you should do. But some ideas are, if you don't need your entire $50 for the month for haircut and beauty supplies, you might be able to take some money away from there. So let's take $30 away from there. That would leave you $20 in this category. And let's say that you don't have as many gifts or special occasions that you need to plan for during this month. So let's take another $30 from there, leaving you 20 for gifts and special occasions. Now you can see that you are back to $1,400, which means that you are in balance with your paycheck. You're going to be able to buy your TurboTax and everything is set. So when you have changes or unexpected things come up, this is the way you can change it on your spending plan and still stay in line with your income. Now that you know how it works, let's put it into action. You can get a blank spending plan in the show notes for this episode at CentsAbleChat.com. You want your spending plan to be ready before the money gets into your bank account so that you can budget it right away before you have a chance to spend it mindlessly. Wait a minute. Budget? Didn't we just create the budget? No, we just created a spending plan. The spending plan is a plan for what to do with your money once it hits your bank account. Your budget is a breakdown of the money that's already in your bank account. Think of it this way. If you plan to spend $200 on groceries and $100 on gasoline, but you go to the grocery store and only spend $50 the first time around, and then you go to get gasoline and it only costs you $75 the first time around, how do you keep track of how much you have left in each category versus how much you still have left to pay certain bills or other expenses? It gets very confusing, and that's where the budget comes in. The budget is going to separate your money into different categories, and if you keep it up to date, it will always give you a running total of what you have left in any given category. Step 5 in the 6 steps to slay your debt is creating your budget, and we're going to work on that next week. In the meantime, if you need help creating your spending plan, reach out to me and let's work together. You can schedule a free consultation at CentsAbleChat.com. While you're there, check out my blog post series, The Diary of a Budgeter. Make sure to subscribe to my YouTube channel and connect with me on MeWe, LinkedIn, Gab, or USA.life. Thank you so much for joining me. And until next week, remember, do the math, live the life.